Hey, how are you? Hope all of you are well. It's your CPA Manish here today on Friday, the 12th of August 2022. And today we are going to discuss the next installment on pension planning, something for all. Till now, we have discussed various pension plans that we can put into place, especially in the last video. We discussed the plans that are available for small and medium-sized businesses. And today we are going to take our discussion further for business owners. So what we are going to discuss today is, if as a business owner, if I want to do more in retirement planning, I want to do more in pension planning, then what options do I have? The most common option that we have, obviously, is the 401k plan, and we have discussed that 401k plan. In 401k plan, you as business owner, you can put in 20,500 as an employee of the business. If you are more than 50 years old, you can put in $27,000. There is a catch up on that. And not only that, you can put 20,500 or $27,000 in the 401k plan. Your family members, if they are working for you, your spouse, your kids, or any other family members, if they are working for you as an employee, even they can put $20,500, or if they are more than 50 years old, they can put $27,000 each into the 401k plan. So that is the limit, $20,500 or $27,000. Now, in addition to whatever you and your family members can put in as an employee contribution, if you have outside employees other than your family members, and if they decide to participate in the plan, and if they decide to put in contribution into the plan, then you have to match them anywhere between 3 and 4% of their salaries. Very commonly, you have to match 4% of their salaries. You have to contribute if they are participating in the plan. As you know, we have discussed what is matching concept. Matching concept is, if they participate, you contribute for them. If they do not participate, then you do not contribute for them, right? So you need to understand that your limits for 401k plan are considerably lower, considerably less. Your limits are $20,500 or $27,000, plus you can put in for your family members if they are working for you. So those are your limits for yourself and your family members, which are lower comparatively. But then to achieve a lower contribution, you're not really paying a lot to the employees. What you're paying to the employees is only 4%. And 4% match is not a lot, especially because it's a match. Match means only for the employees who participate would you contribute. If they do not participate, you do not contribute, right? So it's a match. You do not do it for everybody. You do it only for participating employees. And then because it's a match, you do it only for participating employees, and then you do only 4%. That is not a lot. So that is the set off. You get to take lesser deduction, but then you have to give less to the employees also. So that goes hand in hand. You get lesser contribution and you do less for the employees, right? So let's up our discussion and let's see, okay, what can I do if I want to do more than the $20,500 or $27,000 that we are talking about? So what you can do if you want to up your contribution is you can add what is called as a profit sharing feature to your 401k plan. You can add a profit sharing feature to your 401k plan. What that will help you do is that will help you be able to put for yourself and potentially for your family members up to $61,000. Or if you are more than 50 years old, then you can put in $67,500 each into the pension plan, right? So you upped your game And now instead of putting 20,500, you are able to put in $61,000. Or if you're older, you can put 67,500 for yourself and potentially for each of your family members too. You can do that if they are working for your business. But then there is always a set off, right? So what is the set off? Set off is two caveats here. Caveat number one is that this 61,000 or 67,500 has to be 25% maximum, 25% of your salary or 25% of your income. So only when you have income of $244,000, because 25% of $244,000 is 61,000. So that's the reverse calculation. So only when you have income or W-2 or salary of that higher amount, $244,000, then only you can do 25% of that, which is the $61,000. And that is true for you, that is true for your family members, everybody. So to do 61,000 or to do 67,500, you need to have very high income or very high salary, you and your family members, if they are working for your business. So for higher contribution, number one, you need to have higher income levels, higher salary levels, number one. And the second caveat is when you do such a high percentage for yourself, because you're doing almost 25% for yourself, even though there are some calculations that can factor into the math, you will still end up doing, and in my experience, what I have seen is you will still end up doing anywhere between 14 to 16% for all your employees. Okay, so that second caveat is now your employee contribution is not going to be like 4%. It's going to be 14 to 16%. Okay, and this, I'm not saying it's a match. You know, what happens in a match is if the employee contributes, you contribute. If the employee is not participating, you can leave that employee off the table. But in this scenario for profit sharing, unless the employee is a highly compensated employee, which we are not going to discuss here, but for all other all other usual employees, you will end up doing not 4%, you will end up doing 14 to 16% of their contribution and not match. You will have to do it for all the eligible employees. Okay, so yes, you can up your contribution from 20,500 to 61,000 and 67,500. But then number one, you will have to have such a high income, almost $250,000 plus to do that for yourself, for your family members, everybody who is in your business. And then you will have to do not 4%, but 14 or 16%, and not only for matching employees, you will have to do it for all eligible employees, right? So you up it for yourself, and then you have to up it for the employees also, right? So that is the next level where you go from 401k and add on a profit sharing feature. And those are the advantages and disadvantages and how to do that, right? Now, let's say if that 61,000 is also what is not really enough for us. We want to do even beyond that, right? We want to do even more. Then what you do is, you already added profit sharing feature in your 401k. You can also add what is called as a cash balance feature or a defined benefit plan into your 401k. Okay. Now what happens is this cash balance plan or the defined benefit plan, this plan is an age-based plan. So there is no contribution limit. Like there is no limit of doing 20,500 or 61,000. In defined benefit plan, there is no higher limit. I've seen people who can put in $100,000, $150,000. There are people who are also able to put like $300,000. There is no higher or upper limit. It is an age-based plan. And what an age-based plan means is that the more older you are, the less number of years you have for retirement. The more older you are, the less number of years you have before now and retirement. And the less number of years you have, the more contribution you can do. Okay, this is a very simple explanation of what a age-based plan means. Age-based plans means if you are older, that means you have less number of active years left between now and retirement. And the less number of years are left, the more you can put into pension plan for next few years. That is what is age-based plan. So the more older you are, the more pension you can contribute. And if you are younger, then your contribution comes lesser. Okay, so that is for you. You can put more than 20,500. You can put more than 61,000. Maybe you can put 100,000, 125,000, 300,000. We don't know because the pension actuaries will do all that math. It's not the CPAs who do the math. It's the pension actuaries who do that math. And the pension actuaries will look at your age, do their pension calculation, actuarial calculation, and come back and tell you that, okay, this is how much you will be able to contribute. But how it works is the older you are, the more you are able to contribute. The younger you are, the less you are able to contribute. But that's for you. That's for you. You can do anywhere between $100,000 to $300,000. What happens on the employee side? On the employee side, your contribution is very similar to what we discussed under profit sharing plan. For employees, the contribution is very similar to what we discussed on the profit sharing plan. That is, you will have to do anywhere between 14 to 16% for them. And you will have to do it for all eligible employees. You cannot exclude anybody. It's not a matching concept. You can exclude highly compensated employees that we are not going to discuss today. But other than that, you will have to do it for all the employees, right? So these are the three levels, so to say. You can be satisfied at 20,000 for yourself and your spouse and your family members, and then do only 4% and do it only for matching employees. Or if you want to do more, you add the profit sharing feature, and now you are able to do 61,000 up to 67,500, depending upon your age. But then you need to have higher income, and you will have to do higher contribution for employees, which is 14 to 16% for all eligible employees. And then if you want to go to the next level, you can add a defined benefit feature where you can do $100,000 to $300,000. But then you will have to do 14 to 16% for all eligible employees. Okay, so this is in a nutshell how the pension works. And in last 4 videos plus this one, in total 5 videos, we have gone over a lot of pension options that are available, because I believe there is something available for everybody when it comes to pension planning, retirement planning. There is something for everyone. You have to choose the right one. And over this series, there have been so many questions that you have asked to me, and we have discussed things actively off the air. And I'm glad that it's helping and it's bringing this awareness, and you are seeing what options we have. And if you have any questions, please feel free to let me know, and I'll see you in the next video soon. Okay, take care. Bye-bye.